Welcome back to another deep dive. Today, I think everyone needs to mentally prepare themselves because we are strapping in for something that I can only describe as a roller coaster ride.
I'm not the fun kiddie coaster either.
No, not at all. I mean, the kind that goes straight up, drops straight down, and leaves your stomach somewhere around your ankles. We are looking at one of the most volatile, talked about, and frankly, fascinating players in the entire AI sector right now. We are talking about CoreWeave. Ticker symbol, CRWV.
It really is a fascinating case study. If you've been following the markets, even, passively over the last year, you've almost certainly heard the name.
Oh, for sure.
But hearing the name and actually understanding the mechanics of the business, the real plumbing of what they do, are two very different things.
Exactly. And just to set the stage for you listening, this isn't just a story about a wiggly line on a stock chart. This is a story about the infrastructure of the artificial intelligence revolution. But, okay, let's be honest, the chart is pretty wild. Since their IPO back in March 2025, this stock has seen an explosive 300% jump, followed by a cooling off period where it dropped 40% from its peak in June.
Which is exactly why we're talking about it today. When you see that kind of movement up like a rocket and then a significant correction, it raises a massive question for the learner, for the investor, for anyone paying attention.
Is it a gem or a risk?
Right. Is this company a hidden gem that is just catching its breath before the next leg up? Or is it a risky bet that is, running out of steam?
That is the central question we need to answer. So our mission today is to look past the hype cycle. We want to understand this GPU as a service model they have, which sounds fancy, but is actually quite logical.
It is.
We need to weigh that massive revenue growth we're seeing against the debt they're racking up and figure out if this is a buying opportunity or just a flashing red warning sign.
Precisely. We need to strip away the noise and look at the engine.
All right, let's unpack the timeline first because context is everything here. We are sitting here in January 2026. CoreWeave launched its IPO last March.
So we're coming up on a year of them being a public company.
A year, yeah.
And what a year it has been. As you mentioned, post-IPO, the stock jumped more than 300%. That is the kind of number that makes headlines.
It really is.
It attracts every momentum trader on the planet. It's the type of growth that makes people feel like they're missing out if they aren't involved.
FOMO is a powerful drug. But then, as we said, gravity kicked in.
Gravity always kicks in eventually. They hit a rough patch. The momentum put a bit of a break on itself. As of the current data we have, the stock is down 40% from that peak back in June.
Let's talk specifics on the price, just so everyone has a mental picture of where we stand.
Yeah.
Right now, CoreWeave is trading roughly around $95.22.
Right. And to really understand the volatility, and I want to emphasize this for anyone thinking this is a safe, steady savings account, substitute look at the 52-week range.
Oh, yeah.
It has been as low as $33.52 and as high as $187.
That is a massive spread. I mean, pause and think about that.
Sure.
Imagine buying at 33 and watching it hit 187.
You look like a genius.
You're picking out colors for your new boat. But also imagine buying at 187 and watching it slide all the way down to 95. That is painful. This is not for the faint of heart.
No, it is not. And currently, the market cap stands at about $47 billion. So this isn't a small penny stock. This is a significant player.
It is.
But that drop from the peak tells us that the market is reassessing.
Reassessing what, exactly? Is it reassessing the AI hype in general, or specifically CoreWeave?
I think it's reassessing valuations. When a stock flies that high, that fast, it is running on pure growth potential. It's running on, dreams of what the future looks like.
Right.
But eventually, investors shift their eyes from what could be to what is. They start looking for sustainable metrics. They want to see if the business foundation is solid enough to support that skyscraper of a stock price.
Which brings us perfectly to the business itself. What does CoreWeave actually do? Because I think a lot of people hear AI stock and they assume it's a software company.
Yeah, that's a common misconception.
They think they're making a chatbot or a search engine or some kind of magic algorithm. But that's not CoreWeave at all.
No, CoreWeave is the infrastructure. They operate in the GPU-AS market. That stands for GPUs as a service.
Okay, let's break that down. GPU as a service, it sounds a bit technical.
Think of it this way. If you are a company developing AI, whether you are a massive Fortune 500 company or a scrappy startup, you need massive computing power. You need high-end graphics processing units or GPUs. Now, you have two choices. Choice A. You can spend millions and millions of dollars buying these chips yourself. Then you have to build a data center, you have to install massive cooling systems because these things get hot, and you have to maintain it all.
Which is like building a massive mansion just because you want to host a dinner party once a month.
Right, it's overkill.
Exactly.
Exactly.
Yeah.
It's capital intensive, it's expensive, and crucially, it is slow. Building a data center takes time. In the AI race, time is the one thing you don't have.
So choice B is CoreWeave.
Choice B is you call CoreWeave. They have already built the mansion, they have the server farms, they have the cooling, and they let you rent that capacity.
So it is the difference between owning and renting.
Spot on.
Yeah.
And for customers, this is an aha moment. It offers incredible flexibility. You can rent capacity by the hour if you just have a short workload.
Like fine-tuning a model or something.
Exactly. Maybe you're just fine-tuning a model for a week. Or you can sign up for longer periods if you are training a massive large language model from scratch.
And I assume this frees up a ton of cash for these companies. Instead of sinking their funding into hardware that just depreciates, they can spend it on talent or, product development.
Correct. It's capital efficiency.
Okay.
And frankly, what AI customers need right now more than anything is capacity for workloads. There is a bottleneck in access to computing power. Everyone wants these chips. CoreWeave solves that bottleneck.
So they're selling shovels in the gold rush.
Yeah.
Or maybe renting out the heavy excavators?
That is a very apt analogy.
Yeah.
They are providing the essential machinery required to do the work. And as long as people are digging for gold, they need excavators.
Now, you can't talk about AI hardware without talking about the 800-pound gorilla in the room. Or maybe the 800-pound T-Rex, Nvidia.
You really can't. And this is where the CoreWeave story gets really interesting. This is what separates them from just being another cloud company. Nvidia isn't just a supplier to CoreWeave. They are a shareholder.
That feels like a big distinction. Nvidia has actually put money into CoreWeave.
They have backed them. And that relationship provides a strategic advantage that goes way beyond just the money. It gives CoreWeave what we call first mover access.
Access to the chips.
Exactly. The supply chain for high-end AI chips is incredibly tight. Everyone wants them. Microsoft wants them. Google wants them. Meta wants them. But thanks to its close ties to Nvidia, CoreWeave has been the first to bring Nvidia's latest platforms to customers.
The new stuff.
Specifically, the Blackwell and Blackwell Ultra platforms.
And for those listening who might not follow chip specs daily, because let's be honest, most people don't, getting access to Blackwell and Blackwell Ultra first is a huge deal. That is the cutting edge.
It is the absolute top of the line. These chips are significantly faster, more efficient than the previous generation. Over the past year, as those chips rolled out, CoreWeave had them. If you are an AI company and you want the fastest, most powerful compute to train your model before your competitor does, you go to the place that has the best chips.
It's like a restaurant having the only supply of truffles in the city. If you want truffles, you have to go there. You don't really have a choice.
And there's a broader implication here. Nvidia is the kingmaker of AI right now. They see the entire landscape. They know who is buying what, who is building what. They are well positioned to understand which companies are likely to emerge as winners.
So their investment in CoreWeave is essentially a massive vote of confidence.
It is. It's a signal that listeners should really pay attention to. Nvidia is betting on CoreWeave's success because CoreWeave's success helps Nvidia's ecosystem. It diversifies the customer base. So Nvidia isn't just reliant on the big tech giants.
Okay, so we have a great business model renting out high-demand tech. We have the backing of the biggest player in the game. On paper, this sounds perfect. Let's look at the financials. Is the money actually rolling in, or is this all just, theoretical?
Oh, it is absolutely rolling in. The revenue explosion has been remarkable. In the latest period, CoreWeave's revenue more than doubled. They hit $1.3 billion.
Doubling revenue to over $1 billion. That is not small potatoes. That is serious scaling.
It's massive growth. Usually, companies at this scale fight tooth and nail for 15% growth. Doubling is rare. And here is the other number that jumps out. Gross margin. It's sitting at 49.23%.
Almost 50% margins.
For an infrastructure-heavy business, that is very healthy. Usually, renting out hardware is a lower margin game. But this shows they have pricing power. Customers are willing to pay a premium for that flexible access to the Blackwell chips.
So high growth, doubling revenue, fat margins. It sounds fantastic. If I stopped the deep dive right here, I'd be logged into my brokerage account. But I know you too well. There's always a but.
There is always a but. And this is where we have to shift from the excitement of the technology to the cold, hard reality of the balance sheet. This is the voice of reason moment.
Lay it on us. What's the catch?
The catch is the cost of doing business. To keep up with that explosive demand, to have all those Blackwell chips ready for customers to rent, you have to buy them first.
And Nvidia chips are not cheap.
They are incredibly expensive. We are talking about billions in capital expenditure. CoreWeave has to heavily invest in buying these GPUs. And to do that, they haven't just used their own cash, they have taken on increasing debt levels.
The debt cycle. So they are borrowing money to buy chips, to rent out, to make money, to pay back the debt.
Basically, it's a leverage bet. And that works beautifully when demand is skyrocketing and money is flowing in. It acts as rocket fuel, but debt equals risk.
What are the specific risks here?
The biggest one is a slowdown. If AI spending slows down generally, or if we hit what the market calls headwinds, demand for CoreWeave services could drop.
But the debt doesn't drop.
Exactly. The debt remains. You still have to service those loans. You still have to make the monthly payments, whether your GPUs are being rented out 2047 or whether they're sitting idle.
That is the nightmare scenario. You built the mansion, but nobody wants to rent it for the party anymore, and the mortgage is still due.
Correct. And there is also a psychological risk regarding investors. We mentioned earlier that the stock is down 40% from the peak. Part of that is because investors are currently worried about valuations of AI stocks in general.
Get nervous.
They are. They're starting to shift their money.
Where are they going?
They're moving toward long-established tech companies. The giants that are already profitable, sitting on piles of cash and don't need to borrow billions to grow. We call this a flight to safety.
Right.
In uncertain times, money flees to safety. CoreWeave, with its high growth but high debt profile, is seen as a riskier asset compared to those established players.
So we have this tension. On one side, you have the need to borrow to get the Nvidia chips to capture the market. You have to spend money to make money.
Right.
On the other side, you have the safety of not having debt. It's a classic growth at all costs versus sustainability dilemma.
It is, and that is why the stock is so volatile. The market is constantly trying to weigh those two sides of the scale. One good earnings report, the scale tips to growth, and the stock soars. One rumor of a slowdown, the scale tips to debt risk, and the stock drops.
So what does this all mean for the person listening right now? We've got the context, the model, the financials, and the risks. If you are sitting there looking at CRWV at roughly $95 a share, is it a buy, a sell, or a hold?
Well, based on the analysis we have from the sources, it really depends on what kind of investor you are. We have to sort of categorize the listener here.
Okay, let's start with the cautious investor. The person who doesn't like losing sleep over their portfolio. Maybe they're closer to retirement or just risk-averse.
If you are cautious, the advice is to hold off. There are safer ports in the storm. As we discussed, there are established AI stocks out there, the big platform companies, that offer exposure to the sector without the massive volatility and debt risk of CoreWeave.
If you can't handle a 40% drop, this isn't for you.
Exactly. If you can't handle a 40% drop in a few months, this isn't for you.
Fair enough. Now, what about the aggressive investor? The one who sees chaos as a ladder. The one who has a longer time horizon.
If you can handle the risk, and if you believe in the long-term story of AI infrastructure, the source suggests that now is a great time to pick up a few shares.
Because of the dip?
Exactly. Buying at $95 is a lot different than buying at $187. If you believe the Nvidia partnership is strong and that demand for computing power is going to keep growing for the next 5 to 10 years, then this 40% discount is an opportunity.
It's the classic buy the dip philosophy. But you have to really believe that the fundamental story is intact.
You do. You are betting that the revenue doubling is a trend that will continue and that they will manage the debt load successfully. You are betting that the party at the mansion is just getting started.
It really is a fascinating setup. You have the star backer in Nvidia, you have the plumbing business model that everyone needs, but you have this anchor of debt that could drag it down if the waters get rough.
And that's the trade-off. There is no free lunch in investing. You want the explosive growth, you have to accept the explosive volatility.
So to recap for everyone, CoreWeave gives you access to the absolute cutting edge of AI hardware, the Blackwell and Blackwell Ultra chips. It's generating massive revenue, $1.3 billion in the latest period. But you're taking on the baggage of high debt and a stock that swings wildly.
That's the summary. It's a high-octane play on the AI infrastructure build-out.
I want to leave you with a thought to mull over today, something that really struck me about the Nvidia connection.
Go for it.
If Nvidia is the gold standard of AI, the kingmaker as we call them, and they're betting heavily on CoreWeave, does that make CoreWeave too big to fail in the eyes of the AI ecosystem?
That is a great question.
Or, if the AI hype cools down, is CoreWeave just the first domino to fall because of that debt? Is the Nvidia backing a safety net, or just a sign of how interconnected this whole bubble might be?
That is the multi-billion-dollar question. If CoreWeave stumbles, does it hurt Nvidia? Probably. So Nvidia has an incentive to keep them upright. But is that enough? It's definitely something to think about before you hit the buy button.
Absolutely. Think about your own risk tolerance, folks. Do your homework. And thanks for diving deep with us today on CoreWeave.
Always a pleasure. Until next time.